Now let's understand this question first. This is a traditional versus activity based costing question. ABC company manufactures 3 products A, B and C. So then only there is a benefit. It manufactures multiple products. Data for the period just ended is as follows. So what all detail you have: production, sales, material cost, labor cost. Labor is paid at the rate of 5 per hour. Overhead for the period were as follows. If you see overhead here, in your traditional you would have got one number like 1,90,000. Since this is a ABC, your overheads are now segregated as activity pools. These are your activity cost pools: setup cost, receiving cost, dispatch cost and machining cost. These activity pools costs are determined by how many times they are done, how many resources they consume. So example of setup cost will be how many types it is set up, number of setups. Then receiving, number of deliveries received, that determines your receiving cost. Next, machining is your machine hours. Then setup cost, setup, receiving, dispatch. If you look at the table below, they have already told this is the cost driver data. So A, B, C and total last column is not given. So that means you have to calculate the last column. And what is asked? Calculate the cost and profit per unit, absorbing all the overheads on the basis of labor hours. This is your typical cost sheet you have to prepare. First you have to calculate, start with direct material. So for product A, it will be 5 rupee per unit. Then labor hours is 2 per hour, 2 hour and 5 per hour. So it will become 2 into 5, 10 rupee per unit. After that, overhead. So overhead you have to absorb this 1,90,000. You have to absorb on the basis of labor hours. So that means you have to calculate the denominator, which is the total labor hours you have to calculate. Total labor hour, how do you calculate? For product A, 20,000 units, you need 2 hours. So this makes 40,000 hours. Product B, 25 into 1 hour, 25,000 hours. Product C, 2,000 hours. So 40 plus 25, 65 plus 2, 67,000. Total 67,000 hours. So that is calculated here. First you calculate total labor hours. Next step, you calculate the absorption rate. So total overhead is 1,90,000 divided by 67,000. You get 2.83 per hour. So next what you do, you prepare the standard cost sheet. You start with material cost, then labor cost, then add overhead, hours into that rate. So you will get total cost for each product. So for product A, it is 5 plus 10 plus 5.67, 20.67 is the total cost. And the selling price is 20. So your profit is actually minus 67 paise if you apply traditional cost. Then for product B, similarly, your total cost is 17.84 and selling price is 20. So it is 2.16. Product C, same. This is also coming same. So this is your cost as per traditional absorption method. Now we will see activity based costing, how it changes. So in activity cost, they have already given activity cost pools: setup, receiving, dispatch and machining. Correct? So total is 1.9 lakh. So that breakup is already given: 90,000, 30,000, 50,000 and 55,000. Now you have to divide this by total driver units to get your driver rate. So let's go back to the question. So look at the table, second table, which is cost driver data. Take just the second line, which is number of setup. So number of setup for A 10 times it was done, for B 13 times and C it is done 2 times. So if you take total 10 plus 13 plus 2, so this is 25. Look at the table above. How much is the setup cost? 90,000. So 90,000 cost is coming from 25 setups. So what is my one setup cost? So that is what you will calculate here first. That is called cost driver rates. So for setup you will get 3,600 per setup. Receiving you will get per delivery. Dispatch you will get per order. And machining per machine hour. So here there is no one blanket rate. Here there are multiple rates. Setup is 90,000. Per setup 3,600. That's how you should remember it. So machine hour per unit is given. It is not total number of machine hours. So how many A, B, C are produced? So A 20,000 into 2. So for A you need 40,000 hours. B 25,000 units are produced. So for B you need 50,000 machine hours. For C you need 4,000 machine hours. So total is 94,000 machine hours. Similarly, deliveries received 10 plus 10 plus 2, 22. Orders dispatched 20 plus 20 plus 20, 60. Total 60 orders dispatched. So now you divide by respective number of drivers. You will get driver rate, activity driver rate. Now I want you to calculate the overhead based on this. So you have product A. Okay. Only do for product A. So product A, what is the setup cost? So for that you have to use the setup driver rate, multiply this with number of setups. Your setup cost is how much? 3600. How many setups were done? 10. So 36,000 is the setup cost. Number of deliveries received. So 10 deliveries received. And what is the per delivery cost? 250. So 2500 is the delivery cost or dispatch. Sorry, not dispatch, receiving. So it will come under receiving. Number of deliveries received 1364. So 10 into 1364, 13,636. So next will be your dispatch. How many dispatches? 20 dispatch into 250, 5,000 rupees. Then next is machining. How many machining hours? 40,000 machining hours into 0.58. So 23,404. This is the machining cost. So now overhead cost per product will vary like this.